Well, it looks like the metal's getting slammed again, especially palladium and platinum. And I was going to come out today and say, oh, I know they're going to get slammed. I'm like, jeez, they already got slammed again. Because, well, it's typical. If the markets go down, the real metals, the metals that are the most industrious, I know they say silver's an industrial metal, but platinum is actually more, as a percentage, more industrious, and palladium is even more industrious as a percentage of what's produced, and even platinum. In the case of palladium, if you're taking into account electronics and dental and even photography, there's even a little bit of photography in palladium, believe it or not. Not much, but a little bit. If you add the dental in with that, it's about 90%. Now, platinum, the industrial demand is like 60% or a little over 60%. So when the markets get hit, you'll see those metals go down. Now, the Dow went up today because of the jobs report, probably more than anything. The jobs were, I don't trust these numbers, though. I think they're freaking smoke and mirrors for the most part. And it's, but that's what they go by. That's what the markets go by. But I just want to reiterate one thing I've been saying all along about what Soros did, because, this is one thing where a lot of people in, I don't know if I call myself the alternative media. I guess I'm like a hybrid between the two. But, major and, well, whatever. I'm not major media, but George Soros, I just have to say this, his initial huge bets on bearish bets on the S&P, and it's not just a hedge position, it's 16% of his net wealth now, but his initial huge bearish bets that he first started to place was in August 2013. They're going to expire by the end of this year. So he's going to lose out on that deal if something doesn't happen soon. Now, October's typically a month where, markets crash, and it kind of looks like they're going to crash, but today they went up, but, it's still pretty early. But along with the markets crashing, more than likely you're going to see palladium and platinum crash, but there could be a curveball, because anything that happens in South Africa, for instance, if there's a strike, the price goes way up. If there's some kind of real major problem with Russia, the price on palladium can go way up, and even platinum. That's just what happens. It can change overnight. I think they could be even more volatile than silver, or they're about as volatile as silver. That's always been the whole problem with commodities. It's been noted, as anybody even says in 101 anything, just from step one, commodities are the most high risk, but can be the most high reward too. So if you have this stuff physically, though, and you're not dumping all your funds into it, you're still going to play out. You're still going to play out, because you don't get any interest on your money, and eventually the money, it is going to go way up. But when that happens, there's going to be a lot of losers, because when things do get heated up and the mines are flush with cash, and everybody's buying it, metals, because the sky is falling, that's what they're going to tell you, it's going to happen. Those are going to be the ones who get really stuck holding the bag. If you're buying now or whatever, you don't have to be buying now, but the thing is, today the markets went up because of the jobs report, and I expect, there could be a curveball, like I said, a strike in South Africa, or something out of the blue that comes out really strong with Russia, whereby tensions go way up. That could drive the prices way up again. But if the market's got to come down and nothing else out of the blue happens, that should still bring palladium and platinum down further. Platinum should go below the price of gold again, probably. That's not a guarantee because of outside events, but that's typically what happens when the markets come down. The metals that are the most industrious come down, even though they're not very profitable. Actually, in South Africa, they've had strikes, and I don't know if you've heard about that. I think it was over a year ago. They had cops come out and They actually gunned down some of the strikers with machine guns. Then they finally ironed out, and they killed them. They flat out killed them, right? Now you're talking about, I'm bringing this up because, you're thinking the metals are, they're overpriced or not. I mean, I shouldn't even joke about it. Basically, you're talking about a country with a very high unemployment rate, and they're working in these mines under very harsh conditions, and they're telling, and the prices, the mines aren't profitable now, even with this low labor cost and practically slave labor. You're talking about people working their asses off umpteen hours a day under the worst conditions in the world, and they're striking, because they want more money, and the companies are saying, no, you can't have more money. And, Wall Street spot market is saying the price has to be lower yet. I mean, did you ever think of it that way? All right? And after they even had the strike in South Africa with the miners being shot and everything, they had an agreement. And even though miners were killed by police with machine guns, they had a new agreement, and they had a new things were ironed out temporarily. They had another illegal strike. So that's telling you these miners aren't getting enough money, period. Even though that country is, in South Africa, has got a very high unemployment rate. So what is that really telling you about the price of these metals? I mean, how low could they really go if you start figuring it out? I mean, God, they're freaking working people like dogs for freaking pennies, and, they're striking and dying against these companies, and they're still saying the price of the product has to go lower. That's Wall Street doing that shit. I'll guarantee you that. That's not the actual real market forces at work there. So, you just have to put it to you that way, because if that doesn't freaking put it to you plain as day. In the case of palladium, the only reason palladium is not more than it should be at least the price of platinum, or it should be around the price of platinum. It should be over the price of gold. The only reason palladium is so low is because they had free gulag slave labor in Russia mining it since the 1930s, and they accumulated a large stockpile of it. But it's been rumored that those stockpiles are getting very, very low since 2010, and the demand has been exceeding the supply, and there's been there's been metals such as palladium coming out of those stockpiles every year to support the demand. The spot market is BS. It really is. It totally is a contrived mechanism. And I'm going to point to the link on the video I did about the oil markets being rigged. It wasn't per like conspiracy blogs. There's been an ongoing lawsuit since 2000 about this deal, and it's not just related to the oil markets. It's related to the metals markets. But I don't know how long they can play the game. It's difficult to say. But as far as one thing I expected though was that there was going to be a fake out run up in the metals before the next crash. And it does not look like that's going to happen. But then again, I don't know, because it's like the metals can do anything. All I do know for a fact, though, is if they get ahead of themselves, if you see a fast move up in silver and the metals, I am not going to be afraid to take cash. And, that's something I said, because it's like one caveat. If they have a big blow up in the Middle East, there's going to be a skyrocketing of oil prices, and that's always been the case where if you see astronomically fast moving up oil prices, you'll see gold move up, and then you'll see silver move up. That's always happened that way. It's not exactly coordinated one-on-one perfectly, but around the time of the worst tensions in the Middle East is when you see oil go up, gold go up, and silver go up. If that happens, the markets can change overnight, and silver can get way ahead of itself. And, you're going to see everybody in the alternative media or whatever the hell it is telling you about silver's going to go to the moon, and it's going to go to $200 an ounce, $500 an ounce, $2,000 an ounce. And, you know, it's going to be tough trying to ever get through 50 again. Right now, it's going to be tough trying to get through 30, for crying out loud. But, you know, when it moves up exponentially fast. But that's when, I'm going to tell you though, because I don't work for any of these silver blogger or guys that are in the business or bullion dealers, they're going to be pushing the product at the high prices. That I'm going to be taking cash. I am. You know, and I know people are going to be cursing me out at that time, because that's when people are going to be convinced the most that silver is the best deal in the world, when it goes, after it shows a curve of it going up really fast. Then they're going to be convinced, but then it's too late. Right? Then it's too late. So, anyway, just how it goes, man. So, you know, but as far as, you know, having a, you know, still, I got in the back of my mind that there could be a fake out drive up in the metals and another drive down, because I am highly suspecting the bottom of the next financial crisis, the middle of the next financial crisis, is going to be in 2015. So we're not going to see the metals go further up a lot faster until after that. That's when we're going to see, you know, it might be 2 or 3 years after that where we see the really high prices, where it could go to $150 to $200 silver. There could be a fake out though before that, where it even breaks through 50. That's what I keep thinking. And what could do that is events in the Middle East, because there could be something that could happen very quickly where oil refineries get blown up or something, Straits of Hormuz gets closed or something. But the situation will remedy itself, you know, and then the oil prices will come down, the gold prices will come down, the silver prices will come down. But you remember, they can manipulate it up also. They can manipulate it up just as much as they can manipulate it down. And that's what people, you see, like, you might think you're getting screwed over if you bought it at $20-something. But if you buy it at $50-something, that's really when you're going to get screwed over. And I'll guarantee you that the top people in the silver, you know, aficionado people, whatever the hell it is, they're going to be telling you to buy at any price. I'm not. I'm going to be taking cash. Anyway, over now.